Success isn't about luck. It's about when you start. The earlier you begin, the closer your goals get. Hi, this is Mahesh Kadam, your debt freedom coach, welcoming you to yet another episode of Financial Planning, episode number 7. Today, we'll be deep diving into one of my clients' portfolio where I will be showing you how financial planning with do it yourself method can be very easy for you. But yes, you need to follow a system and you will get the success. But there's a very big disclaimer. This is personal finance is personal to everyone, be it your friend, your brother, your sister, your father, mother, everyone in your family, including our blood relationship. Everything is different. So please don't take my video or my advice as your prime thing and you get onto it. Please consult your professional financial advisor before taking any financial decisions because that might impact your financial decisions as well. Okay, because this video is only for education purpose. I will be showing you how you can plan your personal finance with the help of financial planning process and how you can plan your portfolio and avoid being caught in a murky of situations. Okay, so this is what I want to share with you, and this is a big disclaimer I want to share because a lot of people might come and say that why Mahesh is showing this and I want to do that thing. No, the personal finance things is very, very different for everyone. Okay, so let's jump into this. Today is all about early start brings all goals within early reach. And that is why the first line which I started with that, I wanted to share with you this client. She has been investing about now the client name is Anamika and she has been investing in equity funds. She's a working professional. She's been investing in equity funds, ULIPs and fixed incomes for 12 years now. Now, what is ULIP? ULIP is unit linked insurance plans, investment plans wherein you get an investment cover, a flavor of investment cover, as well as you have a share of equity investments as well. They are investing in equity markets as well. Okay, I will be going deeper into, I will be creating a separate video on ULIPs as well. Okay, the second thing I observed in our portfolio is that she is regularly investing. That's a very good point. But aggressive allocation can help build a sizable corpus. So, seeing our goals, I will share you what our goals are there in a very short while. But before that, let's understand what she has in store and how did I approached her and shared with her. So she's having around 10 lakhs in FDs at contingency funds. That's amazing thing because emergency, like I said, it has to be a good sizable amount because the way you design your goals, most of the people, 80% of the people don't plan the emergency fund. So even though if they have the emergency fund, but they don't have sizable amount, that's what we've seen in Corona time, in the COVID time, where people were able to have that, but they did not have money to spend. Portfolio is a very good, they're striking good balance between depth, equity, and gold. Goals are ambitious. Yes, early start has brought them within the race. That's very amazing because her age is around 28, and it was really very good that she is doing such a lot of things at a very certain young age. That's what I always say that our children has to get that personal financial education more than important than anything else. Some SIPs has to be increased by 5% every year. Skew towards small and mid caps. Yes, they have slightly deviated. Her investment slightly deviated small and mid caps. Yes, because of our age and about the risk taking portfolio might be that be the case because when I observed her risk taking abilities, I have seen that thing. Okay, but yes, she was holding so many funds that which makes portfolio unrealistic. Okay, unveiled, and there's a lot of things because she was not able to manage a lot of things. Yeah, dumb lag funds. Okay, which I think we need to streamline the portfolio and make it easy to monitor. In NPS, I have always suggested that go for auto choice, and this is very important because what is happening in that now, this is the working professional. I'm not talking about the business professional. Working professional, what happens? You have already have a commitment and you have a steady source of income. So always go for auto choice because that will increase and decrease the equity exposure with the age depending upon the thing. You leave it the fund manager, like you do the SIPs for the fund managers. They took the decision. Same way NPS also, you do that. Buy insurance cover of 2 lakhs to CR to safeguard. That's very important because I have seen in this age also she is not able to have that kind of cover. So she has not that ability and the premium will be low based on her age and she can go. Review investments and rebalances at least once a year and reduce risk when goal is near so that you don't miss the target. So this is how I try to uh, make her portfolio more uh, favorable for our goals to achieve. Okay, now moving towards the goals. Before that, if you are a newer subscriber or you're watching the video for the first time or you are coming back again, please sure to click like, subscribe and click on the bell icon so that you will get a notification as soon as the videos are being uploaded. Okay, yes. So, okay, this is sorry. Every Wednesday, I try to create the videos for you. This is all my past clients, so past updates. So you never know what is. That is what I said is a big disclaimer that don't go by these videos because this video is just for education, like how I am planning, how I am using this Excel, and how I am using the concepts of personal finance, which will help you to make it yourself. Okay. So the first, so she has two childs. Okay, she's married. So first child education is around 35 lakhs. She's being estimated. What is the future value if I take it the assumptions? So let's go back to the assumptions. The assumptions are same. I'm taking education inflation as 10%, equity fund returns at 10%, debt fund returns at 7, for other goals 7%. Why I'm going doing that? If you say that, some of the people might say that 10, why you're not going for 12 and everything, because I want to keep it more realistic, more realistic. That means it is very easy for you to understand. And if see, जो भी ऊपर मिलता है, like I always say this example, the cake. Okay, the base is chocolate and the whole thing is cream. Now, in that kind of cake, what you will first have, you will have also have always have that malai, the cream, right? Then you go for the cake. That's how this the percentage is what I have defined for you, the assumptions. If even if you get 12% also, that means the 2% return. It's amazing, right? There's a malai. But the base is what? Base is this thing. So you don't change the base often, right? So I don't want it to give you more realistic. I want to give you a more realistic figure to do that. So the present value is 35 lakhs. So future value, if you see, around 10% I've taken 9 years. She has been considering it's around 82 lakhs 50. Sorry, 82 lakhs 52,817. Okay. Now her child's post graduation is around present value is 35 lakhs. Again, she has taken the same thing, but here, if you see the year have been increased 30 years, 13 years. So it is 1 crore, 1 CR, 1.2 CR. It's 1 crore 20 lakhs 82,949 to be more precise. Okay. Now, it comes to the first child's marriage. I will again will go back to the second child. The first child's marriage is taking a very present value as 15 lakhs. Now, this amount I asked her why she make it very low, because if you see in one of the previous videos of financial planning, I have shared one of my client where her requirement was very big. Okay, but here the present value is 15 lakhs. Now, why? I asked this question. She said that um, as a parent, I can give a certain figure because after that she's to manage her husband and her retirement life. So post that children are educated, they can take care of themselves, and that's what uh, the trend has been happening. That is a very good trend that parents are helping, but don't go overboard and destroy your retirement and everything, right? So I will say this thing. So this is very good. She has made that 15 lakhs present value, years is 18, and rate is 7%. So it is around 50 lakhs 69,898. Okay. Now we come to the second child post graduation. Present value is 35 lakhs, 15 years, 10%. And the present future value is 1 crore 46 lakhs. Okay. Second child post graduation is 35 lakhs. The years is 19 years. The rate is 10%. The future value is 2 lakh crores 14 lakhs 05,868. And the second child marriage is, you can see that 15 lakhs is present value and the future value is 76 lakhs. So that's how we did. And then we come to the retirement. Now, retirement, a lot of buckets are there. Okay, here I just a simple figure to just make her understand, because when we go deeper, there's a different part of financial planning. Okay, there is an advanced level of financial planning. So there's a basic level. That's why I taught, because this video is only for the beginners who are not able to understand the personal finance, how they can manage their personal finance, how do they can do the help of financial planning. This is how they can do it. Okay, let's go to the this thing. So Anamika is her name. I have renamed everything. Now these are the some of the funds which she is having. So if you see the ICCA blue chip fund, so I will not go for recommendation. Okay, so just to hide you in this so that you can. Hmm. ICC Blue Chip is having 7,75,000. She is continuing with an SIP of 5,000. Bandhan Core Equity, there's a very good fund. 1,46,000, 20,000 is continuing. Sukanya Samriddhi, that's what this is for the first child. Well, I'm talking about, right? 7,61,000, 12,000 is what ICC approves Market ULIP. There's a very good fund. 7 lakhs 5,000 6,750. Sukanya Samriddhi for the second child because they having two girl childs. That's how you see the goals are aligned, right? 24,000 and 12,000 is the SIP. And when I'm talking about how I will be coming back on this. SDFC mid cap opportunity is 9 lakh 17,000. 5,000 is the SIP is continuing. Canara Robeco small cap 85,000. 2,000 is the existing SIP. Edelweiss, you see 1 lakh 44,000. 20,000 the existing SIP. HCB, this is a very good gold bond. She's having around 11 lakhs 92,000. Franklin Prima is having 8 lakh 4,000 5,000 XIP. FlexiCap is what I will be suggesting. Parak Parik 2 lakh 73,000 5,000. Helios FlexiCap is again around 62,000 10,000. Jeevan Tarun, very good policy of LIC 4606. Quantum Small Cap is again an amazing fund. Now this is the funds. Now this is very important thing. I just wanted to go to this. Yeah. SDFC unit link pension too. This is very important for her retirement for her husband. And then 12 lakhs is the amount invested, 2,500 the existing SIP. PF, husband and wife, 1 crore 10 lakhs. This is what the figure I wanted to share with you. See, 45,000 the existing amount she is investing monthly, but this is what the corpus is for retirement. And this is has to be for every couple or individual who are planning for retirement. If you have don't see retirement is the most ignorant goal in whole structure of financial planning. So please don't be in those category of people who are ignoring the retirement goal, right? So you be that kind of thing who are aware of the retirement and you want to do that. Because see, based on this recent medical upgradations and this advance and everything, our life have become extended. So post 60 also we still live around 20 to 30 years. That means another 20 to 30 years we don't have money to sustain. So now if you plan, it will be useful for you. And she have an NPS of 11 lakhs. Okay. Now coming back to what I was talking about. I will just hide it. Yeah. Yeah. Existing investment, if you see, we'll just hide it this also. And okay. Now if you see, Anamika, yeah. Right. See, 15,000, I told continue to SIP, but hike the amount to 15,000 because 5,000 is very less for this blue chip company. 20,000, I told reduce this because this is, again, I told you she is more skewed towards the large cap and mid cap, small cap. So that's where I told her to reduce that exposure to that. Sukanya is very good, continue to do this. Smart kit, again, I told you do this as very good. This all things I have told you. Yeah, here I have told, like I said, it has been the momentum theme is going down. Okay, as of now, when I reviewed this, okay, now this is date of 19 Feb, but not I have not reviewed on 19 Feb. It has way back like 2 to 3 months. So I don't know about what is right now because okay, so momentum theme that time was slowing down. So I told her to reduce the SIP for 5,000. This is very good. I told her to keep it till maturity and use that maturity value for child's marriage. Uh, this is fine. Prima has underperformed. So please remove, I told you to remove to Franklin FlexiCap. Okay. Parag FlexiCap is very good. Continue to do this. Elio is also, this fund has done very good. Elios is a very new fund. But I think we need to monitor because I am not having that data. I need more data because the rolling returns is very important. So I'm not able to get a rolling return. I'm still finding out the things. So I've told her from my perspective, I'm very doubtful of this particular fund. So let it be reducing the SIP and continue to move it. Jeevan Tarun is a very good. I told her to continue with this. Small cap is again good. Small cap, this have increased. I told her to increase because this fund was good very at bottom time when I was observing them. Okay, equity opportunities, yes, this has to be increased to for 10,000 because that would make her good. Arbitrage is very good. Arbitrage is a use now nowadays people are using arbitrage funds for planning the retirement. So there's an equity component is coming into the place, but that is again a very good a vehicle, an investment product to explore. So if you're a new investor who is still not done arbitrage, get in touch with your professional advisor and understand what is an arbitrage fund. That will be very useful to plan your retirement. Okay, here I told her retirement, increase it, because now the age is perfect to manage it, because her two children are there, two daughters are there, right? So it has to be that way. And PF is 45,000. Yes, keep contributing, keep contributing. So this is how I told her to recommend all the things. So hope this particular financial planning video has been very good for you, and you are able to understand what exactly how to do the financial planning. Okay, this is just the basic examples which I showed with you with my existing class. I do a lot of in-depth. I go very depth. I do the risk profiling. I don't just directly recommend saying that this client is coming and say, Mahesh, this is the, can you recommend? No, that's not the process at once. So it goes to a long process. I am a qualified personal finance professional. QPFP is aggregated certification program, uh, given by Network FP. You can browse their website and look for my name. My certification will be there. So I'm a valid coach. But yes, if you want a personal consultation of a debt freedom, click on the form. I've excited a Google form in this description of this video. You will find it, and fill that form. I will get in touch with you how to reduce the debt and how to manage your personal finance. Okay, hope you like this video. Do share me what you want to know more about this personal finance. I will be coming up with another idea. Okay, thank you so much. Great to see you back, and I will see you in the next video. Bye.